Hi, welcome to Insurance 101 for Seniors from the Maryland Insurance Administration. My name is Patricia Dorn with the Consumer Education and Advocacy Unit, and I can be reached at the email patricia.dorn@maryland.gov. Our agenda for today: an introduction to the Maryland Insurance Administration, a review of Medicare. We'll talk about the Medicare supplements, long-term care, and insurance fraud. What is the Maryland Insurance Administration? The Maryland Insurance Administration, the MIA, is the state agency that regulates insurance in Maryland. The MIA licenses insurers and insurance producers, the agents or brokers, examines the business practices of licensees to ensure compliance, monitors solvency of insurers, reviews and approves insurance policy forms. We review insurance rates to ensure rates are not inadequate, excessive, or unfairly discriminatory. And we investigate consumer and provider complaints and allegations of fraud. And now we're going to watch a video, how the MIA can help.
A homeowner whose house was destroyed by a fire.
A mother whose child needed treatment for medical illness and the insurer denied the claim.
A senior citizen that believed she was sold a fraudulent insurance policy.
A widower that could not find his spouse's life insurance policy.
An individual that thought his insurance premium had increased improperly.
An individual that thought her insurance policy was improperly canceled.
Help the consumer get her homeowner's claim resolved.
Help the child obtain insurance coverage for the medically necessary treatment.
Investigate the alleged fraudulent activity.
Help the widower locate the life insurance policy.
Explain the company's actions and give each consumer option.
Get the claim paid.
The Maryland Insurance Administration is here to help you with your insurance problems.
Contact us at 800-492-6116 or go to our website www.insurance.maryland.gov.
If you feel that your insurer or insurance producer acted improperly, you have the right to file a complaint. Examples of improper action include improperly denying or delaying payment of all or portions of a claim, improperly terminating your insurance policy, raising your insurance premiums without proper notice, making false statements to you in connection with the sale of insurance or processing of insurance claims, and overcharging you for services, including premium finance charges. So, review of Medicare. What is Medicare? Medicare is a government-sponsored health insurance for seniors 65 and over and younger adults with disability. It was created in 1965 by Congress under Title 18 of the Social Security Act. It was expanded in 1972 to include people under 65 who receive Social Security disability benefits and those with end-stage renal disease. The Medicare Modernization Act of 2003 established Part D. Who is eligible for Medicare? U.S. citizens 65 and older with sufficient quarters of work credit under Social Security. Adults under 65 with disabilities eligible after they have received Social Security disability benefits for 24 months, eligible with a diagnosis of ALS in the first month of Social Security disability benefits and eligible at any age with end-stage renal disease in the 4th month of dialysis. Medicare Part A. This is referred to as hospital insurance or inpatient insurance. It's funded by payroll tax, FICA. Most people who have a personal or spousal work history and who paid into Social Security do not pay for Part A. It covers care in a hospital, some costs of skilled nursing facilities and home health services, as well as hospice care for the terminally ill. Medicare Part B. This is referred to as outpatient insurance. Part A and Part B together are referred to as traditional Medicare or original Medicare. It's funded by Part B premiums and general revenues from the federal government. Part B covers doctor services, lab tests, medical equipment, ambulance services, prevention and wellness screenings, orthotics, prosthetics, and mental health services. There is a permanent penalty for late enrollment, 10% of the base premium for each year you delayed enrollment. Medicare Part C. Part C is Medicare Advantage, plans offered by private companies under a contract with Medicare to provide Parts A and B coverage. It may offer Part D coverage, the drug coverage. It may offer additional benefits not covered by original Medicare, such as vision and dental services. The patient still pays the Part B premium. Part C may have additional premiums, deductibles, and copays. It varies by the company and by plan. The annual open enrollment for Part C is October 15th through December 7th. Medicare Part D. Part D is medication coverage, provided through private companies, either as standalone plans or as a part of the Part C Medicare Advantage plan. No pre-existing condition clause. Must accept anyone who is eligible. You may incur a permanent penalty for late enrollment in a Part D plan. Different Part D plans have different costs and formularies. The formulary is the drug list. An annual open enrollment for Part D is October 15th through December 7th. CMS is a federal agency within the U.S. Department of Health and Human Services. CMS administers the Medicare program and can answer your questions regarding the Medicare program. The CMS website, www.medicare.gov, provides valuable information regarding Medicare, including a handbook on Medicare entitled Medicare and You that provides detailed information about Medicare programs, benefits, rights, and obligations. You may contact CMS directly with your questions regarding the Medicare program by calling toll-free 1-800-MEDICARE. Medicare Supplement. Medicare Supplement is a product to supplement original Medicare. It pays for cost sharing for Parts A and B, but not Part D. It's purchased from private insurance companies. There are 12 standard plans in Maryland. There is no annual open enrollment period. There is a 6-month Medicare Supplement open enrollment period where you may purchase any Medicare Supplement plan sold in your state without underwriting when you are first eligible for Medicare Part B. These are the standardized Medicare Supplement plans. So here's a chart with the different letters for the plans And then the benefits show the different coverage. Plans F and G include a high deductible option, and the deductible for 2020 is $2,340. Plan N requires a $20 copayment for office visits and a $50 copayment for emergency room visits. The Medicare Supplement Rate Guide. The Maryland Insurance Administration publishes this guide, monthly premiums for Medicare supplement policies. Shown here is the guide as of July 1st, 2020, and this publication is updated twice a year for rates effective January 1st and July 1st. This is a snapshot of a page from the rate guide. This example shows an insurance carrier's preferred rates, so the best rates they are offering. These best rates are available to anyone applying for a Medicare supplement plan within their guaranteed issue period, and it's also available to them if they qualify for a special enrollment period. Anyone outside of those enrollment periods will be underwritten, and through underwriting, you may qualify for the preferred rates as well. We list all the plans each company offers in this book, and the rates are listed in 5-year increments up to age 85. In the Medicare Supplement Rate Guide, at the top of each page, you're going to see issue age, attained age, or community rating. So the insurance carriers write the policy based on those 3 things, and I'm going to go over them. Issue age means that premiums are based on your age at the time you purchase the policy. While premiums may periodically increase due to benefit changes, inflation, or increases in medical costs, they will not increase due to your advancing age. Attained age means that premiums are based on your current age. Premiums may increase as you get older. These increases may be in addition to premium increases because of benefit changes, inflation, or increasing medical costs. Community rated means that premiums are not based on your age, either at the time the policy is issued or upon renewal. Premiums are based on other factors and may increase because of benefit changes or overall premium adjustments. Long-term care. What is long-term care? Individuals with a prolonged illness, disability, or cognitive condition, for example, Alzheimer's disease, often need help with daily activities, such as dressing, bathing, and eating, as well as needing skilled medical attention. Long-term care services may include care management, rehabilitation services, adult daycare, or hospice. These long-term care services may be delivered in an assisted living facility, at home, or in a nursing home. How much will long-term care cost me? The cost of long-term care depends upon a number of factors, including the type of care you receive, where you receive this care, who provides this care, and how long you need to receive this care. According to data available from the U.S. Department of Health and Human Services, the national average cost for long-term care services in 2016 were $225 a day, or $6,800 a month for a semi-private room in a nursing home, $253 a day, or $7,700 a month for a private room in a nursing home, $119 a day, or $3,600 a month for care in an assisted living facility for a 1-bedroom unit, and $20.50 an hour for a health aide. What can I do to pay for my long-term care? Paying for long-term care does not need to be overwhelming. Several options are available to make paying for long-term care more manageable. Some of the options include: you may choose to fund the cost of your long-term care through investments you have made, such as an annuity. For more information about annuities, you can see our publication, A Consumer Guide to Annuities, and that link is here. Number 2, you may decide to sell certain assets, such as your home or other real estate. 3, you may decide to obtain a reverse mortgage, and here we have a link. Number 4, you may be able to use your life insurance policy to pay for your long-term care by using one of the following methods: a combination life long-term care insurance policy, accelerated death benefits from a life insurance policy, a life settlement, or a viatical settlement. Number 5, you could purchase a long-term care insurance policy, and you can find out more by reading A Shopper's Guide to Long-Term Care Insurance, and that link is included here. You may also buy a long-term care insurance partnership policy, and there's more details about the partnership policy by following the link at the bottom, A Consumer Guide to the Maryland Long-Term Care Insurance Partnership Program. Will Medicare pay for my long-term care? If you are eligible for Medicare, Medicare may provide limited coverage for skilled nursing and rehabilitation services in an approved facility or home health agency. But Medicare does not cover custodial care services, intermediate care, or services for a prolonged period of time. Will my Medicare supplement policy pay for my long-term care? If you have a Medicare supplement policy, keep in mind that while some supplemental policies provide a limited benefit to help pay for at-home recovery on a short-term basis, not all Medicare supplement policies cover this expense. Also, while some Medicare supplement policies provide a limited benefit while you are in a skilled nursing facility, the benefit will only be payable for the 21st through the 100th day of skilled nursing care in a nursing home for each admission benefit period. Under such a policy, you would not receive any benefits if you are receiving custodial or intermediate care, or if you need care after the 100th day of confinement. It is important that you carefully review and understand the terms of your Medicare supplement policy, what it covers, and how much it pays. Will Medicaid pay for my long-term care? Maryland's Medical Assistance Program, Medicaid, provides coverage for some long-term care services, but this program is only available if you satisfy certain eligibility requirements. You may be eligible for Medicaid depending upon your income, available assets, and/or health status. For more information about the eligibility rules for Maryland's Medical Assistance Program, visit the Department of Health's website, and that link is below. The link for medical care program eligibility explains the eligibility requirements. The link for long-term care gives an overview of which long-term care services are covered. What does long-term care insurance pay for? Long-term insurance policies, long-term care insurance riders to life insurance policies, and annuity contracts provide coverage for certain long-term care expenses that are usually not covered by traditional health insurance and HMO contracts, Medicare, or Medicare supplement policies. Coverage is provided when you are unable to do a certain number of activities of daily living, such as bathing, eating, or dressing yourself, or are cognitively impaired. While the exact terms and conditions of coverage depend upon your individual policy, long-term care insurance generally covers services such as nursing home stays for custodial, intermediate, and skilled nursing care. These policies also may cover home health care and adult daycare. Long-term care insurance can be purchased as a separate standalone policy or as a rider to a life insurance policy or annuity contract. For more information on long-term care insurance, again, we have the Shopper's Guide to Long-Term Care Insurance, produced by the National Association of Insurance Commissioners, and that link is at the bottom of this slide as well. Should I buy long-term care insurance or a long-term care insurance rider to my life insurance policy or annuity contract? Long-term care insurance is not for everyone. Before buying a long-term care insurance policy or a rider to your life insurance policy or annuity contract, it is important to understand what the policy or contract covers, know the limits of the policy or contract, and understand any conditions the policy or contract may exclude. It is also important to make sure you can afford the premium payment. It is a good idea to consult with a tax advisor as well as an insurance advisor when deciding whether a long-term care insurance policy is right for you. You may be eligible for federal and state tax benefits. What questions should I ask before buying long-term care insurance or a long-term care insurance rider to my life insurance policy or annuity contract? Before making a decision to buy long-term care insurance policy or a long-term care insurance rider to your life insurance policy or annuity contract, you should consider asking, what type of care is covered? Is there a waiting period before I can start using the benefits? What happens if I am late paying the premium? Is there a maximum number of days the policy or contract covers? Does the policy or contract have a per day limit? If so, does it take inflation into account? What are the rules about pre-existing conditions? What must happen in order for me to receive benefits under the policy or contract, like a doctor's certification? Has the insurer received approval to sell long-term care insurance in Maryland? Can my premiums for long-term care insurance go up? Yes. Your premium may be based on the age you were when you bought the policy, but the insurer may raise rates if needed. A long-term care insurer cannot raise your premium by more than 15% in a 12-month period. Maryland law also states that, except under limited circumstances, your renewal premium cannot be greater than new business premium rates, except for differences attributable to benefits. Rates will not change based on your claim history. Does the Maryland Insurance Administration review rate increases? Yes. Actuaries review the requested rates carefully for compliance with Maryland law. Additionally, there are public hearings held once a quarter to review requests for rate increases. Members of the public may speak at the hearings. Do I have any options other than accepting the premium rate increase? Yes. Maryland law requires every long-term care insurance policy and certificate to include a provision allowing the policyholder to reduce coverage and lower the policy premium in at least one of the following ways: by reducing the maximum benefit or reducing the daily, weekly, or monthly benefit amount. Additionally, a long-term care insurer may voluntarily offer you other ways to reduce the impact of a premium rate increase by including options in the policy to lower the inflation protection rate, or by providing an option to reduce the inflation protection from compound to simple inflation. Before you make any decisions involving reduction of benefits, you should understand the long-term impact of doing so. For more information on long-term care insurance premium rate increases, please visit the Maryland Insurance Administration's page on long-term care, and that link is at the bottom of this slide. Insurance fraud. What is insurance fraud? Insurance fraud is when an insurance producer, adjuster, or consumer commits a deliberate deception for financial gain. Insurance fraud is one of the most costly crimes in our country, costing about $40 billion per year nationally, according to the Coalition on Insurance Fraud. It is estimated that each household pays approximately $1,000 extra in insurance premiums each year to offset the cost of insurance fraud. Committing insurance fraud can result in civil or criminal prosecution, jail time, penalties as high as $10,000, or jail time and penalties. Insurance fraud takes many forms: completing a false document, making a false statement, an insurance producer pockets a premium, selling unauthorized insurance, exaggerating a claim, billing an insurer for services that were not provided, and making a fraudulent claim. The Maryland Insurance Administration takes insurance fraud seriously, and we investigate all referrals of insurance fraud. And here we're going to watch a video on insurance fraud.
Insurance fraud is one of the most costly crimes in our country. According to the FBI, insurance fraud costs about $40 billion per year nationally, costing the average American family between $400 and $700 in additional premiums. Committing insurance fraud can result in civil or criminal prosecution, jail time, penalties as high as $10,000, or jail time and penalties. Recently, a case involving a Prince George's County woman was referred to our investigators. She had claimed lost wages from her job due to injuries after an automobile accident. A Maryland Insurance Administration fraud unit investigator was able to retrieve documentation showing she was financially compensated by her employer for the entire period of time she was not working. She was attempting to collect lost wages, even though she was still getting paid by her employer. She pled guilty to one count of theft and was given 5 years probation in order to pay $12,403 in restitution to her insurance carrier. Marylanders are encouraged to report insurance fraud activities to the Maryland Insurance Administration's Insurance Fraud Division. You need not give your name, simply call 1-800-846-4069.
Seniors are often targets of insurance fraud, particularly in regard to life and health insurance. Be wary of a salesperson or telephone caller who contacts you unsolicited. The salesperson probably has obtained your information through a mailing list. Be wary if they use high-pressure tactics. Common tactics include offering a last chance deal or limited offer, or attempting to pressure you to sign forms without reviewing them. Be wary of a salesperson or telephone caller who urges you to cash in an existing annuity or life insurance policy to buy a new annuity, life insurance policy, or other investment. Generally, annuities and life insurance are worth more the longer you keep them. Changing to a new annuity or life insurance policy may cause you to lose money over the first 3 to 5 years. You also may be charged a penalty if you withdraw money from your annuity early. Discuss the tax consequences of early withdrawal with your tax advisor. Be wary if they claim to be from Medicare, Social Security, or another government agency. An insurance producer or broker who claims to be associated with the government is breaking the law. Be careful if they want to sell you a package policy that includes several different benefits, some of which duplicate a policy you already have or include coverage you do not need. Be careful if they want you to pay cash or make your check money order payable to him or her. Never pay with cash and always request a receipt. Be careful if they want you to sign forms that contain false or incomplete information or are blank. If they want to fill out the forms for you, make sure you read over and understand all of the forms you sign. If you are unsure whether an insurance product makes sense to you, reach out to your friends or family or a trusted accountant, attorney, or financial advisor before making an insurance purchase. Tips to protect yourself from insurance fraud. Slow down and take your time. Does the price seem too good to be true? Pay by check or credit card and make sure you receive your insurance cards and documents in a timely manner. Use caution with unsolicited contacts. Deal only with licensed insurance producers. They must maintain proof of being licensed. Ask to see it. Keep and review your insurance documents, including a copy of the insurance policy with endorsements and declarations outlining your coverage and its limitations. You are encouraged to report insurance fraud activities to the Maryland Insurance Administration's Insurance Fraud Division. You need not give your name. Simply call 1-800-846-4069. Consumers may also email fraud referrals by sending completed forms to this email address listed on this slide. You can contact us at the Maryland Insurance Administration at 1-800-492-6116 or 410-468-2000. And you can contact Medicare at 1-800-MEDICARE, and both web pages are listed on this slide. Any questions? Please do not hesitate to send me an email. My name is Patricia Dorn. Email address patricia.dorn@maryland.gov. Thank you so much.